So this webinar will be recorded. You will get a recording of this webinar. Okay, so it looks like about half of you have been trading for 5 years or more. That's cool. And the rest of you are evenly divided between newbie and 3 to 5 years. So that's great. It looks like we've got so the majority of you have actually been trading for at least 2 to 3 years, and the biggest group of you has been trading for more than 5 years, so that's great. So there's a lot of experience in this room, which is nice. But only 67% of you participated in the poll. All right. Okay, let's do one more here. So we'll close that poll. Let's do this one. Have you purchased? Next poll should be, have you purchased an option or not yet? I mean, from the names I can pretty much know who's purchased it or not. But let's just take a poll, see who's actually bought it. Okay, wow, cool. 60% of you so far that have actually voted, which is only 56% of you. Come on, guys, all of you vote. So far, 60% of you have actually purchased the NOFT, which is, it's excellent. Come on, get your votes in. In my polls and elections, your vote does count. Okay, so you got to vote. All right, actually, okay. Well, now that all of you participated, about a third of you have actually purchased it, and 2/3 haven't. No Chads, what's that? Okay, so we'll close out this poll. So about a third of you already have the NOFT. Next poll we're doing is, are you familiar with bid-ask footprint? Thanks, guys. I really appreciate your participation this morning. That's excellent. Oh yeah, you guys in Florida had the voting machines, right? Yeah. You keep pressing for the person that you want to vote for, right? And then it actually tallies that you voted for the other person, right? Oh my gosh. Okay, 86% of you are familiar with the bid-ask footprint, or the bid-ask ladder, all right? And only 14% of you aren't familiar with it. Okay. Yeah. So 88% of you are familiar with the footprint or tape, right? Let's see how many of you are familiar with profile. All right, so far it looks like about 80% of you are familiar with the profile, volume profile or market profile, either or, 83%. Okay, so most of you voted, so 86% of you are familiar with the profile. And There's only 3 or 4 more questions, guys. I appreciate you participating because it'll make the next webinars more useful for you. Okay, most of you have attended our webinars before. So that's good. It also tells us that we need to get a wider audience in. We need to be sending this out to more people. Okay, how would you describe yourself as a trader? Consistently profitable, break even, or still losing? All right, Chris. Okay, so about a third of you are consistently profitable. That's cool. There's 29% of you consistently profitable. Funny, that's consistent with the amount of people that have purchased the NOFT in the room. 25% consistently profitable, now that 80% of you have voted. 63% break even, 13% still losing. So that's good. So most of you are out of the still losing category, and those of you that aren't, we want to get you at least to break even, but ideally into consistently profitable. And I think we got 2 more poll questions, and then we're done. And this one is asking, have you ever purchased order flow tools in the past, whether that be for the footprint, bid-ask ladder, DOM tools, time and sales tools, all of the above? None. Okay, so 20% of you have purchased a footprint or bid-ask ladder or some kind of tool related to the footprint. None of you have purchased DOM tools. 17% of you have purchased time and sales tools. And some of you have purchased all of them. 43% of you have purchased none. And the very last question, what would you need from us to purchase the NOFT? Even you new guys who have purchased it already, if you can click, I know some of you have purchased it already. If you can just click, what it would do, what we would have to do to make making a purchase easier. Let me trade in all my other stuff for it. Yeah, Chris, that's right. Trade it all. It wouldn't be great if every indicator out there actually had some kind of credit attached to it, and then you can when you come into our webinar, you could wouldn't that be awesome if you could trade in all the junk? But ours would be expensive. We would say you have to trade in all your junk, not just 1 or 2 indicators. You'd have to give us your whole hard drive full of rubbish indicators that are on there, and then we'd take care of you. All right, so 14% say it would be easier for you to purchase, or what you'd need to purchase the NOFT would be help with a trade plan. 14% of you say on-demand videos. We actually have that. We actually have 30 hours of videos in the member section, okay? Plus all the recorded webinars in which we do teach about the NOFT and different ways how to use it. And 14% of you say technical assistance to get started, and 57% of you say other. So I'm curious, guys. The 57% that say other, what you would need to purchase the NOFT. What would that be? If you can just type in the questions box. Okay, so we're going to close out the polls now. A free NOFT. Error. Already purchased another order flow program. Okay. Difference between ours and some other guys out there. All right, Ted. Yeah. Okay, excellent. All right. Well, now that the polls are done, let's continue. This will probably be a shorter webinar today than usual, simply because most of you do have the NOFT, and we're going to concentrate on how to use it. Okay. All right. So I'm Jay. Obviously, I'm the host for this webinar. My email and Skype is on the screen, and I've posted the link and the email and Skype address in the chat box. Obviously, no discussion of order flow or futures options or forex trading would be complete without first addressing the risks involved. The trading is risky. Okay, you can lose money, and therefore you should only trade with risk capital. That's money that, if you were to lose that money, would not affect your lifestyle or retirement plans, should you have those. Somebody else in here? It's good stuff. Yeah, I am taking notes. Who's in here? Is Kai in here? Is that you in here, Kai, or is somebody else from the office in here? Let's see something in the chat there. Okay. All right. Feel free to chime in whenever you want. Okay. So yeah, futures, forex, and options trading is risky. Okay, please be aware of the risks. Only trade with risk capital. Everything we do and say here today, or in any of our videos or promotional material or websites, is for educational purposes only. All right. And no solicitation is being made for any security, nor is any guarantee of income being made. Okay. Quick note on the webinar recordings. Last week there was some technical difficulties with some of the recordings. One of the webinars actually didn't happen, so you may be short one or two webinar recordings this week. But all the webinar recordings are uploaded to YouTube and are sent out at the end of the week. That can be as late as Sunday or Monday, because we do have webinars on Saturday. So you should register for all the webinar events, even if you're not able to attend, in order to receive the recordings. If for some reason you don't receive the email with the recordings, check your spam or junk folder before contacting customer service. If after doing all that you still haven't received the links, you're welcome to send an email to customer service at ninjaorderflowtrader.com. So those of you that are newbies, or are still losing, or are simply break even in your trading, the whole idea behind this today is to help you see the light at the end of the tunnel. I promise you today the webinar will be a little bit different than the usual format, because we're actually going to really turn things upside down. I'm going to basically lay out some simple steps before I even show you what the NOFT is. Okay, so let's do that. Let's take this out of the slideshow. Let's do a little bit less formal presentation today, and hopefully by doing so we'll make it as useful as possible for you. Where stats. Here we are. Let's take out a simple piece of paper, okay, or notepad. All right, and so let's call this how to incorporate Ninja Order Flow Toolkit into your trade plan. And let's make this bigger so everybody can see. 26. Is the print large enough? Can you guys all see what I've typed here? Is the typing that I'm doing here on this Word document, is it large enough for you guys? Okay, very good. Okay, I think first and foremost, you've probably got some education even as a newbie. Okay, so past education and future education. All right, you've got that already. Okay, you've at least got something, and out of that education, you probably have some method or style of trading that you like. Okay, and that's going to be, up to you. No, you don't like any of them. I like you, George. You got a great sense of humor. All right, so for most of you, you probably have got some education in terms of trading. All right, let's be more specific. Let's call it trading education. And maybe you'll, hopefully you'll get more trading education in the future from us and from other sources that are professional. Okay, so the method or style of your trading, that's up to you. That's unique to every trader. So we could talk, some of you are familiar with the market or volume profile, so that might be a style of trading that you like. Anybody use Fibonacci? Trying to. Yeah, that's the problem with a lot of what's out there, Fibonacci, pivots, whatever it is. Elliott wave theory, trend lines. Yes, very well. Yeah, okay. All right. Whatever it is that's out there that you're using, the good old lagging oscillators, MACD, RSI, stochastics. All right. Cycles, yeah, those are interesting, aren't they, Robert? Market cycles. All right. Price action. Somebody type BS. Yeah, some of it is. A lot of the big problem with these methods or styles is you just don't know which is going to work. Okay, which level in the profile has a probability of holding, which Fibonacci level has a probability of holding. Where are we in the wave count? All right. How can you confirm it, right? Which trend line is going to hold and which one is going to break? Which RSI, MACD stochastic divergence is actually going to work or is going to fail, all right? So the bottom line is, how to incorporate it into your trade plan. Hopefully you already have some kind of method or style, okay? If you don't, I would highly recommend looking into ones that are based on the actual volume, okay? All right, so you've got a method or style, all right? And basically I'm going to give you 3 or 4 things as a checklist, okay? All right? So, I'm going to make the assumption today that you're adequately capitalized, okay? I'm going to make the assumption um, based on the polls that you are somewhat familiar with the bid-ask footprint, all right? And I'm just going to give you a checklist of the NOFT, okay? So can we get this over here? There. So your NOFT checklist is going to be like this, all right? All right, the first thing I'm going to want you to look at, even if you never, yeah, that's the idea, Ted. Use a footprint and whatever style you're using together, okay? Use the transparent volume information to confirm, okay? So in our case with the NOFT, what we're going to look at is imbalance, okay? This is your checklist. Check for imbalance, okay? Are there aggressive buyers or sellers? And in the NOFT, what that is based on is you're gonna see it as numbers on my charts that are highlighted either in blue or red. Okay, you can change the NOFT to whatever you like. Okay, whatever color scheme you want. All right, but on my charts, those numbers are highlighted in blue and red. Okay, so that's the first thing I want you to look for. Okay, the second thing I want you to look for is where is your stop. Okay, and a lot of times that's going to be based on hiding behind an imbalanced number. Okay, or what we call an auction, which is an area of unfinished business. Okay. Auction is going to show up as the gold lines that are on my chart, gold horizontal lines. And I mean, you can put these in any order of you want. Okay, all right. You probably want to put the stop first, but whatever. Put it in whatever order you feel works for you. Okay. So where's your stop? That can also be behind block trades. Okay. Block trades or trade size. Okay. So just in terms of your stop, I want you to look at 4 potential places to put your stop. So either behind a group of aggressive buyers or sellers, behind our auction lines, okay, the unfinished business lines, okay, or behind block trades. I kind of like the auction lines for trailing my stop. Same thing with the block trades. I'll look at those for areas to possibly trail my stop. All right. And trade size may be the other side of a trade size zone where there's been a lot of volume. A lot of times you can put your stop on the other side if there's multiple trade size horizontal lines. So the block trades are going to be represented by, on my charts, they're represented by red horizontal lines. And same thing with the trade size lines. I toggle between them. Everything with the NOFT is usually toggleable. Toggleable. Interesting. Okay. All right, so I want you to look for imbalance. I want you to look at, where is my stop going to be if I potentially enter the market here. And I also want you to look at the stacked imbalance zones. And what those are zones where there has been imbalances stacked on top of each other. Okay. All right. And how those are represented within the NOFT is they are opaque zones, opaque horizontal zones drawn on the chart. Okay, and you can color them to whatever you like. Okay, so I've got opaque green zone. It's the outline of it is green, and then within it it's a kind of an off-white or grayish color. Okay, so I want you to look for stacked imbalance zones. I want you to also look for potentially block zones. Again, same thing, same concept as the stacked imbalance, but those zones are stacked upon one another as well. Okay? Those are block trades stacked one upon another. Okay? Block trades stacked one upon another. And similar to the stacked imbalance zones, they are represented on the chart by opaque zones that are drawn automatically on the chart for you. Opaque horizontal zones. Okay. So in terms of yeah, I'll get to that, Robert, in a minute. But in terms of a checklist, people said, okay, the NOFT looks great, okay, but what exactly am I looking for? Well, these are just some of the indicators: the imbalance, all right, the auction, the block trades, the trade size, stacked imbalance, and block zones. All right. There's about 13 or more indicators now included in the NOFT, and I'm just giving you about 4 or 5 of these to look at to be able to make a decision on whether or not you should actually enter the market. Okay? Does what I've written here make sense? Is this easily understandable? I'm trying to break it down to its core, so that when you get the NOFT, or those of you that have recently purchased it, that you have something to go on. Okay? And since this webinar will be recorded, you will get the recording, so you'll have this checklist, and those of you that have taken notes, well, you've got something to work off of already. So just to review, your NOFT checklist, whatever method or style you're using. Some of you are using Fibonacci, some of you are using cycles, from some of you are using profile. Whatever you're using, okay, confirm it with this. Confirm it with imbalance, all right? Aggressive buyers or sellers coming into the market, all right? Figure out where's your stop, Your max stop is probably going to be between 6 and 10 ticks max. Okay? If it's not under 10 ticks, forget it. Okay? You're taking too much risk. I'll just tell you. I'll tell you that right off the top. Okay? So imbalance, aggressive buyers or sellers, they're highlighted on the charts in blue or red. We'll get into the charts in a minute. Okay. Figure out where your stop is going to be. You know, my favorite place to hide my stop behind is usually the highest or lowest imbalance number, or a group of imbalances within the candle that I'm looking to enter on. Okay. Oh yeah, Robert, I'll look at the stop, you know, before the entry, or, you know, if the bar completes and I can see right away, okay, well, where should my stop be? All right, then, you know, I can enter usually pretty quickly, or I can wait for a pullback. I'll show you a video later of a trade I took yesterday, and you'll see I literally had like no drawdown on the trade, so that's part of the entry. That's part of the entry strategy too. All right, it's trying to figure out, okay, well, you know, sometimes you got to switch your thinking a little bit from, okay, well, my entry should be here, my stop should be there. Well, why not put your entry closer to where your stop should be? All right, and you'll see that in the video, and I'll point that out to you, you know, in a few minutes here. Okay, so where's your stop, and, you know, where can you hide it once you've taken your position? All right, figure that out. Stacked imbalance zones. All right, you'll see those zones drawn automatically on the chart, so, you know, very easy to see. All right, all these things are easy to see. You either got colored numbers. It boils down to three things. You either got colored numbers, and you either got horizontal lines on the chart, or you got horizontal zones. So really, I mean, it can't be simpler than that, guys. All right. So, you know, looking at that, looking at those three things: horizontal lines, colored numbers, and zones, you should be able to figure out a trade pretty easily. Okay, that was the whole concept behind the NOF, is to not have to read every single number within the tape, and to have what's highlighted important. Yeah, exactly. If you don't know where your stop is, you don't have a strategy, and you're gambling. Yeah, exactly. Yeah, I only got one or two trades today, Ted. I got one loser, I think, of like 3 or 4 ticks, and I got one winner of 50. So that's a good win-loss ratio and a good risk-to-reward ratio. Okay, so, you know, I'm not going to add anything to this checklist now. Okay, you can add whatever you feel is relevant. Okay, we'll quickly go through all the NOFT indicators and everything, but, you know, these are the things that I'm looking at, and it basically boils down to 3 ideas: colored numbers, horizontal lines, and horizontal zones. And it basically boils down to 3 or 4 indicators. Okay, imbalance, auction, block trades, the zones, and trade size. All right. Yeah, exactly, Robert. The trade size is the overall volume at the particular price point. So you can set that to whatever volume size you want. Yeah. Okay, so you know, without even going into the rest of the slide presentation, let me find the video from yesterday. It's yesterday. I think it's this one. Yesterday was the 18th. Well, it's today for most of you. Okay. Here we are. Here we are. This is what can everybody see the can everybody see the video that I brought over? Everybody seen the video now? I haven't started it yet. Okay. Okay. All right, folks. Confused with the visual. What's confusing, Apurba? I want you guys to get to get clear on this, so I'm willing to take the time to do it. So if everybody can be patient with the people that are less familiar or a little bit slow. Too many lines. Well, we're gonna break it down, Apurva. And again, you don't have to have all this on your chart, okay? This is just a template, all right? All right? Please show you imbalance. See the red numbers? See the red highlighted numbers within the bar over here? Those are sell imbalances, okay? Sell imbalance. Conversely, blue numbers are buy imbalance. Okay? So you've got sell imbalances and you've got buy imbalances. And what is that? We talked about it already. Imbalances are aggressive buyers or aggressive sellers. Aggressive sellers in red, aggressive buyers in blue. Okay? Now, imbalance is calculated as a percentage versus the other side of the market. Okay? So, if you've got buyers on the right, sellers on the left, basically whatever percentage you set it to, whether it's 100, 150, 300, 400, whatever it is. Let's just say 300, okay? 300%, all right? One side has to be greater than the other by 300% in terms of the number of contracts, okay? They're bid-ask, Andrew. Okay, they're not up, it's not up-down tick. The only thing we use up-down tick for is on the Forex spot because there's no centralized exchange with volume and bid-ask information available. Okay. Yes, exactly, Apurva. We're reading it diagonally. So the sell that's being read and the buy, the comparison is being made diagonally. You're absolutely right. Okay. So imbalances, we've talked about imbalances. You know what they are now. Is everybody clear on that? To use the 300% example, in other words, if I had a 300 on one side here, and above that on the other side, I only had 90, well, 90 times 3 is what? 270. Okay? Great work, Van Gogh, indeed. Yeah, my chicken scratch made it complete, right, Apurva? So in a scenario where you were looking for 300% imbalance, basically you look at this 300 versus 90. Well, 90 times 3 is 270, right? So yes, you're going to get an imbalance. It's going to be highlighted in red on this side, okay? And vice versa. If you had 300 on the buy side and 50 on the sell side, well, yeah, that buy side is going to be highlighted in blue. So everybody's clear on this? Am I going too fast? Perfect. Okay. So back to the checklist. We're looking for imbalance, right? Aggressive buyers, aggressive sellers. Okay? All right. So you can see that on this bar that I'm pointing to on the left, we had lots of aggressive sellers, okay, coming down. We came back up into what? There is actually the second arrow here, arrow number 2. This is arrow number 1. The second arrow here, as soon as that bar closed, this imbalance zone was drawn. Okay? It was drawn automatically. Okay? That's your imbalance, or what we call the stacked imbalance. Okay? What that is that's the aggressive sellers or buyers stacked one on top of another. Okay? And you can determine, you can put whatever setting you want. I believe I have mine set to 3. 3, 5, 10, however many you decide takes to draw a stacked imbalance zone. Okay? And that's going to draw the zone automatically on the chart. So you can see that opaque zone drawn up here. Okay? Where do we go down to? Where do we go down to in this example? We go down to a buy imbalance zone. The edge of this zone is green, okay, and the top zone up there, the edges of it are red, okay. So this is a buy imbalance zone, okay. So this is your buy imbalance zone, and that's where the market went to. So there's your stacked imbalance zone, and your stacked imbalance buy zone, and your stacked imbalance sell zone. Is everybody clear on that? Everybody sees those opaque zones that are drawn on the chart for you automatically? All right, so you're going to see where I took the entry. You can see where I have my limit order up here. Okay. Have you tried to set up stacked orders in the ES contract? I have trouble with it since I get all the cells with lines or need enter some huge order size filter. Yeah, that's the thing. You need to adjust the filter. There is a template, Chris, in the members section. There's a specific template for the ES. But I mean, if the volume has changed, you might have to adjust that a little bit. But there are block trade settings, and you can use those for the block zones as well. Check in the member section, Chris, and then get back to me. I'll take a look at it tonight and see what might be a good setting. Just email me, j@ninjaorderflowtrader.com, and I'll play with it yourself, and then I'll also take a look at it. So, quick review of our checklist. We've looked at 2 things. We've got the imbalance, and we've looked at stacked imbalance zones. Okay? Are we clear? Okay, good. Good. Lots of questions. I will get to them. Okay? Let's see. I'm just deleting some of the comments in. All right. Okay, so on the chart we have imbalance and we have stacked imbalance zones. All right, and the next thing that I'm going to look at is auction. Okay, those are areas of unfinished business. Okay, auction. And what did we say they were? We said those were the gold horizontal lines on the chart. Okay, so we're looking at 3 things so far to make a decision. All right, 3 things that are actually displayed on the chart at this point in time. Okay, so not only do we get a sell imbalance here, the market goes down to the next buy imbalance. The market comes up to the sell imbalance again, goes down to the buy imbalance, comes up to the sell imbalance, breaks through it a little bit, and then I started looking at the market, around this time. This is around 8 o'clock, so gold is open and bonds are opening up, okay? And so I'm looking at this and thinking, I have stacked imbalance, I have imbalance zones, and I have a place to put my order with a very low stop, okay? All right, so I'll just move through the video, okay? Let's play this. So now look at this. Look at where my order is and look at where the market is. My order is up here. Why? Can anybody tell me why? Why is my order up there? Buy imbalance and buyers. Okay, some of you are saying buy imbalance, big imbalance, no buyers. You have taken a chance, isn't it? At a sell zone, okay, above the sell zone and above the value area high. Is that a trap buyer up there? Yes. All right. Quite a few reasons, and a lot of you got them right. Okay, we've come back up to this sell zone. Yes, we've gone through it a little bit, but there's only one aggressive buyer above that sell zone, okay? In this particular bar here, we call it bar 1. There's only one aggressive buyer in there. If we're breaking to the upside through a zone where there was aggressive sellers before, we're going to have more aggressive buyers in there to be able to do that. So then on, let's call this bar 2, when bar 2 comes into play, I see, whoa, we got a sell imbalance there of 110. If you guys can see that, there's a 110 highlighted in red. Now remember what I said earlier. Put your order where you think the market will not go to. Put your order, where you would normally put your stop, okay? So it takes a little bit of, mental flexibility, but you'll get there. So the market here has already moved down, all right? It's already moved down, okay? And we're getting more sell imbalance, okay? Market moves down. And look at this. Look at this. Look at where the market goes to. I'm still not filled yet, okay? Still not filled. So I move my order a little bit, okay? I moved it down again. So I missed it. It came exactly to where I wanted, all right? I didn't get filled, okay? Now I'm not going to chase this thing, all right? Because it did the rotation right here from buying to selling. In other words, it formed a pivot, a lower pivot here. I'm pretty sure this market is going to go lower, and it did it at the top of this sell imbalance zone, and it came exactly to where I wanted to enter, okay? But I'm not going to chase the market that far, okay? So on this bar, if we call this bar number 3, if we call this bar number 3, all right, and bar number 4, On bar number 4, there's a 62 imbalance there. Okay, 62 sell imbalance. We had 110 up here earlier, and now in this bar we've got a 62 imbalance. Okay, so yeah, exactly, Robert. Yeah, that 21 up there, that was a trapped buyer up there. Exactly. So we got a 62 sell imbalance within a sell zone. Okay, and now my order is in. I had to move my order down 75.64. Why? Because it came exactly to my price point previously, but I didn't get filled. Okay. Scroll the video forward a bit. Now look, we're moving down. We move down from 54, or pardon me, 64 all the way down to like 56 or 58. Okay. Most people are going to think, oh geez, I've missed this. Okay. No. Look at what happens. We come to the bottom. Yes, I'm using a limit order to enter, Robert. In this example, I'm using a limit order. It's sell limit. Okay. Now watch what happens. We come down to the bottom of this buy zone. You see there's a buy zone in here, the opaque zone. Okay. We come down to the bottom of it, the bottom edge of it, right here, and look what happens. Start to bounce all the way up to my entry. Okay. So I literally get a trade with zero drawdown. Okay. All right. And my stop is, I've put it just behind that 110 up there. Okay. That's my initial stop. Is behind the 110. All right. Remember the 110 up here? There's my stop there. So we're talking about a 7-tick stop. All right. Which, it wasn't even needed. All right. Can everybody see that? The stop is up there. Can everybody see where the stop is? I get taken, yes, very nice. Wait a second, on what bar did you get taken into your trade, Robert? I got taken in on that bar there. Because the market came down to the bottom of that buy zone and it bounced all the way up exactly to my entry. Exactly to my entry point at 75.64. You wouldn't have expected the market to do that, would have you? But I know that I'm looking at, okay, well, where do I expect the market not to go? Well, it shouldn't go past that 62, really. Okay? Really, in terms of, looking at this trade again, my only mistake on this trade was not having a 2-tick stop. Because it should not go above the 62. There was a 7 on this bar, and then there was a 62. Both of them are sell imbalances highlighted in red. Okay? Okay? So I put my order where I didn't think the market would go. All right? See how changing your thinking a little bit? It can really help. Sometimes you're not going to get filled. You saw the first time the market came exactly to my entry point, I didn't get filled. The next time I tried to enter, it came exactly to my entry point and I got filled. Oh, where did I put my order originally, Robert? My order originally was right here, just ahead of that 110 on this bar, okay? That's where my order was originally. I didn't get filled, okay? So when price came up to that entry level, I didn't get filled. Then when I saw that 62 come in on this bar, I knew that, okay, I'll put my order in here to go short. and it did fill me on that bar. Okay. Okay. I'm just looking at the questions, guys. Quit ES, too many algos. Yeah, so on this chart right now, just to recap, to identify the zones, there's a couple of zones down here. There's a buy zone here. There's a buy zone here. There's a sell zone here, okay? And again, in terms of continuing with the theme of being mentally flexible, I don't really care so much if a zone that's drawn, I don't really care whether it's a buy zone or a sell zone. I just know that it's an area that if I see things like sell or buy imbalances, if I see things like block trades or trade size, okay, or auction, that means that I want to be interested to potentially do business in that area. Okay. Well, I took this trade, Purba, so I mean I'm doing it real. I did it real time. Okay. This trade was taken yesterday during just ahead of the U.S. session. Looks like my entry was at what, 8:33. So you go back and look at your crude oil chart. Okay. Yes, good question, Robert. Can imbalance zones overlap? Yes, they can. In this case down at the bottom, this zone that's around 75.40, there's some zones within that zone. It looks like there's a sell zone, it looks like there's a buy zone, and it looks like there might be a block trade zone all in there. Okay. All right, Ted, you took this short also? Awesome. So yes, on that bar, to answer your earlier question, Robert, about what did I take the trade before that bar closed? Yes, I did take the trade before that bar closed. Okay, because I know that we got rejected up in this zone earlier, and I didn't get filled. So I had, I was confident that the market's going to go down. So then it was a question of, well, where do I get in with a good stop? Well, and where do I think the market shouldn't come back to? Well, it probably shouldn't come. It shouldn't go above that 62. Otherwise, if it went above that 62, I'd expect this to go much higher. So, yeah, I entered before that bar closed. Most of my trades, I do not enter when the bar is open, but in this case, I did. The bar was still open; it hadn't closed yet. Okay. So yes, imbalance zones can overlap. It was taken in real time, so I'm not looking back. I'm looking, I'm basically taking you through the thought process. I'm taking you through the exact checklist that we just went through. So if we refer back to the checklist just for a moment, we had imbalance. Okay. Stop. Where was my stop? 6 to 10 ticks max. Yes, original stop was 7 ticks, and then I think you'll see later I was able to move it down very quickly. Stacked imbalance zones, check. Okay. So out of the 3 or 4 things that I'm looking for in the checklist, check, check, check. All right. So let's return back. So we've gone through imbalance. We knew where the stop was. We knew there were zones. There was a zone where I wanted to take the trade. We're good. So we've identified the zones on the chart. Yeah. Why did you take a sell in a green bar? Yeah, I didn't. It wasn't green. It was actually a down bar. Why wasn't there a second imbalance zone drawn on the same bar at 20? Good for you, Robert. Robert is paying attention to these details, guys. These are the questions that we love to have. I'm going to go back in the video. Where's the video at here? Okay. I'm going to go back in the video a little bit. Robert asked a very good question. Okay. Robert is asking on this bar here, okay? Robert's asking why on this bar you got a sell imbalance drawn, okay, sell imbalance zone drawn, because you had stacked sellers. You had stacked aggressive sellers, okay? He's saying, well, you had stacked aggressive sellers down here in the bar lower. Why didn't you get another zone drawn? The reason is this, is that I can have the imbalance within the bars set to one number. So let's say I have that imbalance set to 150%, okay? The stacked imbalance zones, I can actually have that number, a different number, let's say 300%. And that's exactly what is happening on this chart. That's why you don't see a zone drawn in that second set of sell imbalance within that particular bar. Does that make sense? Is that clear to everyone? So you can have imbalance within the bars set to a particular percentage, and then you can have the zones drawn based on a different percentage if that's what you want. Or you can have them drawn based on the same percentage. It's up to you. Okay? The blue boxes in each bar, are they the POC for that bar? Yes, they are. The volume, highest point of volume within each bar, the VPOC, volume point of control, or the COT as some of you might refer to it, is highlighted in blue in each bar. Okay? That's the point at which the highest amount of volume was traded. Am I using the limit order to enter? Yes. On what bar did you get taken into the trade? We went into it already. You placing your order before the bar closes? Answered that. Awesome questions, Robert. 2 bars prior to your entry, we are seeing some aggressive buyers. Yeah. Again, good question. Robert's saying, well, you know, why are you entering? Why are you looking to enter short in this area when on, you know, this bar there was stacked aggressive buyers, okay? You know, there was all buyers in that particular, mostly aggressive buyers in this bar, okay? There weren't any aggressive sellers in it. And then on this bar you got that aggressive buyer too, okay? Well, the reason is that we go aggressive buying into this zone, this sell zone, okay, and we just pop above it. But you know, where are all those aggressive buyers? Where's the trade size in here? I don't see it. Okay. You got 24, 25, 27. Those are the aggressive buyers on that first bar. Let's call it bar 1. On bar 2, those guys kind of disappear. You've only got 21 aggressive buyers. So, you know, looking at that, I'm looking at this. Well, wait a second. You know, where are the aggressive buyers that are going to push this market higher? Well, they didn't show up. And then on the very next bar, if we call that bar 3, 110 aggressive sellers show up. Then we make the turn. So I guess you could consider that where I first wanted to enter, which was just below that 110 aggressive seller, I guess you could call that advanced entry, okay, or aggressive entry. But not really, because that aggressive buyer is getting rejected, and you know, the worst case scenario for a stop is 2 ticks. It's just above that 110. I suppose you could put it right, you know, give it an extra tick, so 2 or 3 ticks max. Okay. Yeah, that red imbalance, the 110 imbalance, that's, I mean, that's so much bigger than that 21 buy imbalance, right? But we cannot safely say the buying is drying up, correct? I would say that it is. I mean, there's nothing in there to indicate. You know, the bar closes, and then we get that aggressive selling in there. So, you know, I think this market has turned around. You know, this is it, the cool thing about the NOFT is that you can learn. It helps you to start thinking. I guess you could say more like a market maker or more like a professional trader by visually giving you the cue. Okay, and well, what's the cue? If we look at this chart, you have this aggressive selling coming down. We come up, we form a lower high here, and we come down again. Okay, so never mind the rest of the chart to the right. Okay, from this line, don't look right. Okay, don't look right for now. Okay, think to yourself, answer this question. If there's going to be a stop run, okay, or if there's going to be a pool of liquidity and I want to get short, where is it going to be? You know, if you think the market's rigged, and we already know that it is, okay? And if you think or know that the market is controlled by the big institutions and, you know, hedge funds and the HFTs, and it is, okay? Where are they going to go? Where are they going to go? If this market is going to go down, where are they going to go? They're going to go above the red sell zone. Exactly, Ted. They're going to go above that zone. Why? Here, I'll just do a little drawing here, okay? I'll just do a little quick drawing here. Okay? This is how most people are thinking, and then I'm going to show you how the NOFT told you that that's what was going on. This is how most people are thinking. They're thinking, whoops. They are thinking, here's a market that is downtrending, okay? It comes up, it goes down, comes up, goes down, and then what will happen is the market will come up to here, and it'll pop that level by a few ticks, okay? And then all of a sudden, it goes down again. That's your opportunity, okay? That's your opportunity to continue with the trend. People will say, well, you broke the previous high. Come on. Don't be so naive, okay? Of course we popped the previous high. Why? Because that's where the liquidity is. If I want to get short and I need to get 100 contracts short, okay, or 200 or 500 contracts short, you know, where are all the buy orders going to be to be able to fill my sell order, okay? If I have, let's just use just an extreme example. If I have 100 retail traders, okay, all with one contract, short the market, okay, and they've been moving their stop below the highs, okay, they're short, they've been moving their stop just above the highs. To get my 100 contracts at the best point possible, all I have to do is move the market up to where those traders have their stops, and I'm going to be able to get filled at a very advantageous price, okay? Exactly, Apurba. Kai's term is the retail flush, okay? So, that pattern, how can we see it? How can we identify it within the NOFT? And I'll show you, we're running out of time, guys. Before I continue any further, has this information been useful? Have you learned anything today about how to use the NOFT? Yes, yes, excellent. Very, 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 very useful. Okay. Right. Excellent. And I appreciate the questions and the patience. Did good. All right. So looking at this chart, based on what we just talked about that I drew on the paint program there, okay? All right. Based on what I talked about, here it is. Sellers, you make a low, come back up, make a lower high, come down, make a lower low, come up. There's your breakout trader. That you know who the 21 is? The 21 is the breakout traders, okay? That's the buyer getting trapped. Okay? And then here we are. Somebody's able to sell however many it was, whatever it's broken up into, but the smart traders were able to sell 110 contracts at this price point. Okay? So, while you're watching it off, and you specifically, Robert, and everybody who wants to figure out how to be able to take these kind of entries, I've already shown you how to do it today, and I didn't get filled on that first entry. I had to take a lower price. So what? I had zero drawdown on the trade. How about that? All right? I want you to start looking for these situations where if you've missed the initial move up or the initial move down, start looking for the smart money. Start looking for the smart money, which is going to be an aggressive seller or buyer, depending on which side, coming in above a previous high. That's the smart money, okay? And B, start looking for the dumb money, okay? Start looking for the suckers, okay? And that's going to be the aggressive buyers in a downtrend or the aggressive sellers in an uptrend coming in just because we've popped a previous high or low, okay? But was that a stop run or short sellers on short sellers, or a move to sucker the breakout traders to go long before the market moved down? Honestly, Robert, I couldn't tell you, but I don't need to know to be able to take the trade. Trade what you see, okay? The NOF makes it easy for you to see what's going on, so trade it. Don't worry about whether it's the breakout trader getting sucked in, or just a stop run on the short sellers. Don't worry about that. Worry about, okay, is there a potential sucker there? Yes. Okay. Now, do I see smart or aggressive money coming in? Yes. Do I have a stop? 6 ticks, 10 ticks, or less? Yes. Enter. Didn't get filled? No problem. Enter on a pullback, and that's exactly what you see. And so, going back to our checklist, just before we finish up the video, and we get close to the closing of this webinar, is, the checklist is valid. Use it, okay? All right? Imbalance. Where is the stop? Imbalance zones, block zones. We didn't really see. We didn't really go into the block zones, but I mean, they on the chart they look. You can set them to look different, but I've got them set to look pretty much the same as the stacked imbalances. So, just based on those 3 or 4 concepts, you can incorporate the NOFT into your trading very easily. Okay. So back to the video, as the market goes down, now my stop is, you can see I've moved it to 2 ticks. Market continues down. I see that here there's a buy and balance zone as well as a auction, okay, the gold line there. So I know that that's a potential area to put my stop behind. Here, there's a red line, red horizontal line. That's a block seller. So that's another potential area for me to hide my stop behind. Okay. Another block seller. Let's come in here. So I know this market is still on my side. Market continues down, get a little bit of a pullback. Here you can see I put in this comment here. Low 20s are going to be the test to see if we continue low or not. Volume point of control currently at 75.22. Okay. You can see my stop now. Where's my stop move to? My stop is up here, right up there, just behind this imbalance zone and the auction, the yellow or the gold horizontal line. Okay. Continue lower. That was the London session low. If we break lower, I'm expecting 75 to 74.80. I didn't wait for it. We did get there yesterday, as you know. We did get down to 74.80. We actually went all the way down, I believe, to the 50s, low 50s, by the time I went to bed. So I don't know where we went after that. So we're in this area. We go down. Keep going down. Where's my stop now? My stop is behind this block seller, the red horizontal line. Okay, so my stop is right there now. We're coming into the time of the U.S. stock market open, and the crude oil market is actually already open now. I've moved my stop even more aggressively because we're getting some hesitation ahead of the 75 even number and around the U.S. stock market open. Down in this area, we're getting some hesitation. My stop is now moved to here, just behind the last aggressive seller. Move down, and I get taken 50 ticks, little drawdown, aggressively trailed the stop as we headed into the 75 area. May go lower, I don't care. Always good to book profits, easy to do with the NOFT. I didn't get spooked when I saw the aggressive buys up at the beginning of this trade, Robert? Is that what you're talking about? No, there's got to be follow through. There wasn't follow through, and then I see aggressive selling come in immediately after that. It's a big clue of what's happened. Now, let me see on this chart, on this trade, can we see an example? This is a pretty this was a pretty, according to Hoyle trade, there wasn't much of an example of them trying to pop the previous highs on this trade, but that's neither here nor there. So a review of the checklist. Sound like a dog this morning. So a review, whatever you've learned from your trading education in the past and whatever you're going to learn in the future, it's still relevant. It's still useful. Okay. Whatever method or style you're using, you can see how you can incorporate that into the NOFT. We've got a nice little checklist here that I want you guys to be using, and anybody who's going to be buying today, let's see what I said here. minimum. Sorry, Kai, I didn't see your comments there from earlier. Yeah, and Kai is saying in my example there was also a decline of buyers coming in as well, but that's a more advanced concept. I don't want to get into that, but he's absolutely right. He said give one to Chris. Well, you get the recording. So the bottom line, guys, is I've only looked at 4 or 5 indicators out of the 13 or 15 that are included in the NOFT, and how you can incorporate them, okay, and how to use them. All right. So I'm not even going to go into the entire presentation and spiel. I think we're done. I mean, I think, wouldn't you agree with me that today, that all this education and learning how to use it, I mean, if that can't convince you, I don't think anything can. Okay. Yeah, we will do another webinar tomorrow, and I'll continue with the same theme. Those of you that are ready to order or considering ordering, I'll put the email and Skype in the chat there. But I mean, I just, to be honest, guys, I'm almost kind of exhausted, trying to beat people over the head with this. I mean, it just becomes. I've tried to break it down to its real, as few nuts and bolts as possible to give you a solid foundation on how to use this tool. And it comes down to it. It either makes sense, what you're hearing makes sense, and you see it, or it's time to move on, right? So, I've given you the checklist. I've given you the main keys to the kingdom, okay? the fifth element, okay? The 5 elements I've given you, all right? Imbalance, stop, imbalance zones, block zones, auction, block trades, trade size. I've given you the pillars, okay? Okay, when is the right time to move the trailing stop, Apurba? Any time is the right time, provided you see something that's logical, you see something that makes sense, okay? You need to be seeing things like auction, you need to be seeing things like block trades, because you have to have somewhere to hide your stop behind, okay? I usually hide my stop behind 2 places, and you saw it in the video, okay? I'm not BSing you guys here, right? I'm teaching you what I know. I'm teaching you what I do, okay? What I do is I hide behind imbalances. I hide behind auctions. I hide behind block trades. That's where I'm hiding my stop, because the market shouldn't go to that point, okay? If it does go to that point, well, I'm probably wrong anyway. So it's always good. Never be afraid to book profits. If you think of it this way, if you took every trade that you take with the NOFT, and 50% of your trades you lost 5 ticks, and 50% of your trades you only made 10 ticks, so what? You're still profitable, okay? Yeah, I mean, I'm patient, Apurba. It's going to depend on the style that you're trading. Apurba's got a good point here, okay, guys, and I can't discount it. But he says I find that you're moving, you're late in moving the stop. When I'm looking for a larger move, Apurba, which I knew that market was going to go between 50 and 100 ticks, okay? So based on that, yeah, I'm willing to give it a little bit more room. I'm willing to let it pull back a little bit more, which in this case it didn't. But you guys have seen videos that I've sent out where it's pulled back to my entry point, or 1 tick above my entry point. And because I have not moved my trailing stop aggressively until the market really, starts chugging in my direction, until that train has really got up to speed and left the station. And because of that, I've still been able to trade with a 4 to 6 tick stop and been able to, book profits of, 40, 50, 70 ticks a trade, right? And also what Robert says is valid, guys, and I'm not going to discount that either. When you're watching the market in real time, you hope to make sense of it fast enough. It comes with time, Robert. Give it the time. All right. Do you use an ATM or do you manually adjust your stops and profit targets? I use an ATM. Like, I want to stop as soon as I enter the market, Robert. I want to stop in the market. Okay. So I do use the ATM, but basically my ATM is set with a 9 tick stop. Okay. So, it's I'm not willing to take a stop over 9 ticks. That's my catastrophic stop. And then my targets, the initial target, I think I've got it set to like 30 ticks or something like that, and then I adjust it manually. And then as soon as I've entered, I already have an idea of where I want my stop to go anyway, right? So I move it to that, just above that imbalance, or wherever I initially thought that the stop was going to be, and that's part of the checklist, right? So stop, imbalance zone, stack zone, block trades, auction. So 4 simple concepts, 4 or 5 simple tools that you guys can use to be able to utilize them now and get it into your trading immediately. Well, George, I guess they would have to be, otherwise, I couldn't enter that trade in real market conditions. And I've sent you guys out trades, other trades, same thing. But I mean, I'll put it to you this way. This is one of the most challenging professions in the world. I think all of us would agree. Otherwise, we'd all be printing money, all right? And the bottom line is, any profession, doctor, lawyer, dentist, any kind of trade, welder, plumber, whatever. Hours and hours and hours of training, right? Hours and hours and hours of education, hours and hours of experience have gone in to becoming a professional. That's why you're called a professional when you are involved in those kind of trades, pun intended. So I would encourage any of you who are looking at purchasing this or are going to purchase this today, number one, go through all the videos in the member section. They're not just there for fluff, okay? It's not well, here's a toy with your Happy Meal, okay? All right. The videos are there for a reason. Use them. So are these webinars. They're here for a reason. Yes, they're here to sell the Noft, but they're also here to educate you guys, all right, and to get you up to speed on how to use this tool. Okay. All right. Where's Santa when I need him? Let's see. I want to try it. Okay. Exactly. I don't blame you. One of my best webinars. Thank you, Chris. Do I trade the overnight session in crude? Yeah, sometimes, Robert. I mean, that trade that I just showed you, that's pre-market. That's before crude opens, before the stock market opens. And sometimes I will get trades during the London session. Yeah, I am available for private mentoring. Okay, so email me or Skype me if you want that. Are those bars? Okay. The sequence for going through the videos, Robert, I would just go through them and make notes. Make notes. Make note of the questions that you have, or make notes of things that look interesting to you that you think you can adopt into your trading. You're very welcome, George. But I would go through. I would just go through them in sequence. That's probably the best way to do it. And then you're good. All right, folks. So I believe we're at the end. So $34.97. All right. I think it's a steal at that price. And it's also going to be coded for another platform as well. So that's in the works as well. All right. I'm starting to believe. All right. Good. You're turning into Neo. Yeah. All right. Take care, everyone. And yeah, we got another webinar, same time Thursday night. And we'll see you guys then. Give me some feedback, all right? Send me an email or Skype. Tell me what you liked, what you didn't like. And see you at the next webinar. Thanks, guys. You too, Apurba. Enjoy the rest of your evening, guys. The day's just getting started over here. Take care.